In this video, traders are going to combine a pivot point strategy with an exhaustion candle. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. Right, so pivot points are quite useful. I think they're pretty good sometimes for framing the trade. If you don't know about pivot points, go and check them out. I've done a video on these before. They're very simple formula that you can find an indicator pretty much for any charting platform. If you don't have an indicator, very easy to code. It's basically based on the prior day's open, high, low, close. Simple, nice, easy thing to look at. And I like simple stuff, not because I think that there's any great advantage to being simple over advanced, but I just think that the simpler it is, the closer you are to what really matters. And what really matters is price. Price rules everything. That's what our P&L is dictated by. It just rules the whole game. And when you start to get too advanced and you kind of have multiple differentials of this and that and the other, you're going to get away from what really matters. And the good thing about pivot points is literally just a sum based on the prior day's key levels, open, high, low, close, like I say. So anyway, pivot points. So we're combining pivot points, intraday pivot points, with what is even a nicer way of reading price action, exhaustion candlestick or candlesticks, but we're specifically looking for exhaustion candles, or candles that change the sentiment mid candle. In other words, candles that have a good wick, a good tail, small body, big body with a push through and a pullback, but specifically the wick, the drive through. You know, the exhaustion type ones we like to look for, ones that push through, go look there, pop their head above resistance, don't like it, and drive back lower. So once we've got our pivot points on our chart, we're using a 1 hour chart for this. Now, will it work on a daily? No, it won't, because you're using pivot points. You've got to use it intraday. I don't think you can go lower than a 60. You could probably maybe go up to a 2 hour, 4 hour, but stick it on a 60. I think that's the best settings for this trade. So the idea is, if we have, and we're going to use pivot R1, R2, S1, S2, if price approaches one of those levels and we get an exhaustion or a change in sentiment type candle at that level, we are going to take the counter trend trade. Very simple strategy, very simple rules. You can see we're not going to get this very often, but when we do, it's going to be very powerful. And also guys, we can quantify the risk, which is what I love with strategies. Good strategies to me are ones where you can quantify the risk like that. You don't have to think about it, you don't have to kind of overdo your thought process. There's the quantification of the strategy. I'm going in. Right, okay, euro yen I've got for you here. We've opened up, pushed lower below the pivot, we approach S1, and we get one of our lovely exhaustion type candles. In other words, push through, fail, pull back, close. Now the stop is, well, you probably answer it yourself, is logically going to be a few pips under that low. We are going to want to just have the low because it's already gone to a fresh low there, and we're going to want to take maybe 6-7 pips, something underneath that low. That's it. Nothing clever about it. We're going to just do that, and our target is going to be a new high. You heard it right, a new high. This is why I like this kind of stuff. And there are statistics, I've looked at the statistics before, perhaps not something to include on this video, where we've seen lots of good stats that show when you hit S1, the chance of then hitting the pivot are reasonably high, and this kind of stuff. The point is, the summary is, that markets are rotational. They'll push in one direction, they'll look for fresh territory, and then turn. So if, and I'm not a big fan of just arbitrarily having a level that's given to us by formula and taking account of trend trade there, which you would be doing if it hit S2. But if we do get an exhaustion candle that has confluence with S1, S2, pivot point R1, R2, depending on how it's come to it, then I might think that this is an interesting level. It's proven itself to me. So for this euro yen trade, we've got a lovely exhaustion candle there that reverses, closes back above it. We've got to stop below. Yes, we've got to sit through quite a lot of messing about, but that's the name of the game, guys. We can't cherry pick the trades that we take, and ultimately it reverses back and we actually do get an exit back at new highs, and that's looking like 100 and something pip trade. Very nice. Next one we look at is US dollar CAD. Again, similar kind of thing. We push up to R1, Beautiful R1, beautiful exhaustion candle on the 4 hour, or the 1 hour should I say. So in other words, we're pushing up, we're poking our head through. Market doesn't like what it sees, supply demand imbalance shifts back the other direction, pushes lower, we take the trade on the close. Now admittedly, this is quite a big candle, this is going to be a reasonable size stop. Nothing you can do about it. You can either say, you know what, I don't want to take stuff that's over a certain amount of stop, or I say I'm going to take it because the risk reward is still pretty decent. You can kind of look at it and go, okay, well the low is here, the risk is here, it's kind of 2.5, 3 to 1. Do I still want to take it? Yes, I do. And that will be obviously in your rules before you kind of make the decision on the fly. So in this case, great example again. You hit it short, comes back down to a new low, and you're out a new low. You're not looking for a hero trade here. You're just looking for the logical pivot from one side of R1 or S1 to the other. And I'm trying to find a loser. I mean, obviously, guys, you know what happens most of the time is it will just rip straight through, straight through R1, straight through S2. That's fine. That's okay, because we're looking specifically for that exhaustion candle at that level. It's the best confluence you can get. It's basically proving that that resistance or support level is valid. Then we see the price action actually do something at that level, and the nice bit which I alluded to earlier, we can quantify our stop. If it drifts straight through it, we don't care. If it pushes to it and reverses without forming that wick, without forming that tail, without forming some kind of candlestick pattern reversal that we like, we leave it. Another one you could perhaps do is a bullish engulfing or bearish engulfing, but up to you guys. You know, that's we're kind of adding complexity that we perhaps don't need to do. Tails, wicks, going through R1 or S2, you trade the counter trend trade, your stop goes above or below, you look for a new high or new low. Very, very simple rules. You're not going to get it that often, but when you do get it, as you can see, it's going to be quite powerful. Let me know how you get on in the comment section below, and if you like this kind of stuff, hit the subscribe button for more videos from me and others on the channel. Take care, see you in the next one, bye bye.